it's pretty much following what we've seen in the other PMIs in Europe and UK and other countries. We get the ISM this week for services, so we'll keep a close eye on that. But as far as this one goes, it was bad news as far as the market was concerned, and we saw that in evidence pretty starkly, if you like. Just look at 10-year yields as one of the metrics. You know, an absolute cratering. It got there well under 3% now, looking very soft. Again, these slowdown fears are really taking hold and causing the market to pretty much reprice what they expect from the Fed, and that's going to be big going forward, because what we're doing now is we're shifting to the other side of the boat, whereas before yields were shooting up, you know, over 3.5% on the Fed hiking to 4% terminal rate, if you like. You know, now the market is really starting to question: can the Fed get that high? Are they really going to hike that high? And are they really going to let the economy suffer as much as what this early data is suggesting? And here we are getting the reprice in things like yields. And again, we're seeing this morning a bit of a divergence. Okay, the US yields are obviously closed, but it's pretty stark, the numbers we're left with there. And here we are seeing European yields rising. So this is exactly what we've been looking for in terms of how the market is going to play out, potential recession fears, and how the Fed's going to hike. So, as I say, what we've got is potentially the market running to the other side of the boat now. They're getting a bit more negative over the Fed. So now it comes down to, are the Fed going to change tone at all? Are they going to start suggesting that, okay, this soft landing may be heading for not such a soft landing, we may need to ease up on policy? If you go by all the Fed speakers so far, they're not changing tack at all. So perhaps the market will now run too far to the more dovish side or less hawkish side. And as we get to the next FOMC, the Fed said, you know, we don't care, we're going to keep on our path. Then we see another bolt to the other side of the boat and yields probably jump again. So all this to and forth, back and forth, is going to be what brings us the decent price moves. And we'll look at some of those in a moment. So just to have a look at what we've got upcoming this week, because it is a fairly decent week for data again. Tomorrow in Europe and other countries, we start getting the services PMIs, the final readings there. Factory orders will come through later on in the US session tomorrow. Another one to keep an eye on, see how those inventories are building up. Into Wednesday, we've got Eurozone retail sales in the morning. We'll take a look at the NBA data coming up as well, again, to see how the housing market's going to looking like at the moment. We've had two strong reads or bounces in the NBA following, you know, several months of negative numbers. So we'll see if that's going to continue, or is it going to be a dead cat bounce? And then, as I say, we get the big ISM services index. Going to be looking for the same similar themes. Is we've seen a bit of a divergence in other countries' PMIs between services and manufacturing. You know, some see manufacturing drop while services rise. There's always a little bit of the virus situation still in there with different parts of economies opening up at different times. So there still could be a little bit of skew there. US jolts on Wednesday as well is one to keep an eye on. It's very lagging data, so this will be coming out for April or maybe even May. And it's a job openings and labour turnover survey. So it tells us how many vacancies are out in the market. It's been really strong, as we saw unemployment, you know, a market that's really tight on labour, and we're seeing lots of vacancies. So are we going to see that ratio narrow? But one part of that I look for is what's called the quits number. Now, this number is people who potentially leave a job, and it's seen as a bit of an indicator. They voluntarily leave rather than made redundant. So it's seen as a bit of an indicator as people moving up the jobs ladder. So the reason people quit is because they've got a better job elsewhere, maybe better wages, better pay, better opportunities, who knows. So a strong number there can give an indication that the jobs market is really healthy and really strong, because people have the ability and they feel comfortable leaving a job to move up the ladder. So it's the quits number in that one that we'll get. Also on Wednesday, we get the FOMC minutes. Now, these used to be something worth watching because it gave us a bit of insight into the thinking of the voting members. Not so much these days, because after every FOMC, if we haven't heard from every member 30 times in the first 2 weeks since, and if we don't know where they're all positioned now, 2 weeks after the FOMC, the FOMC minutes aren't going to tell us anything new there. So it's lost a bit of luster, but we'll keep an eye on it. You never know. You never say never in this business. Same thing really into Thursday. We get German industrial production. Probably not looking at anything too healthy there, but you never know. You might get a surprise. But obviously, the state of play happening in Germany at the moment suggests that we're going to be getting more bad news from there. ECB minutes, again, similar to the FOMC minutes, we get a bit more detail on the thinking behind it, and some members said this and some members said that. But again, we've heard from countless ECB governing council members, so there shouldn't be any surprises in that. A couple of the labour reports. Challenger jobs report. This is what's called a layoffs report. So this is a metric that measures firms that have an intention to lay off workers. It doesn't mean that those layoffs will turn into redundancies or actual job losses, but it's companies who come out and say, okay, maybe in Q4 we're looking to cut 20,000 from the workforce. So this is a minor number that measures that sort of metric. Again, it's not one that you trade off that is normally a big market mover, but it's just another one. You put another ingredient to the jobs market data that we look at, just to see, you know, our layoffs picking up, our firms feeling the pinch. You know, we heard of companies like Telsa looking to lay off workers into the latter part of the year. So, you know, this is the type of report where we get to see the exact numbers and when those are likely to happen. ADP, as always, is our sort of precursor to the NFP. There's no direct correlation to this one and the NFP, but it is the first NFP type number in the same week, so it gets market attention. We'll have a look at that in more detail later this week. Jobless claims, again, another weekly report to keep an eye on, just to build into that jobs picture. We're seeing claims on the rise. The 4-week average creeping up again potentially says that any problems in the labour market are starting to maybe develop into that. And being the day before the NFP, this can get a little bit more attention because people look back over the period for the NFP, look at the jobless claims, try and factor that into that, as well as taking the PMIs and ISM numbers as well. And then obviously into Friday, it's going to be about the NFP number. Currently expectations are around the 270 mark. So we'll see what obviously we get from that, looking at the wages as well for that inflationary pressure. And it's double bubble because we get the Canada Labour report on Friday as well out at the same time. So for any loony traders, that can be a bit of a mix and match one to look at. If you get a strong NFP and a strong Canadian labour market, you know, you then have to mess around to see who's going to come out on top in the dollar CAD trade. Obviously, if it both falls the same way, i.e. a good NFP and a bad Canadian jobs report, that's obviously going to be a boost for dollar CAD, and conversely, a bad NFP and a good Canadian labour report will see dollar CAD dropping. So one to keep in the mix for you loony traders there. Right, so that's the coverage of what we're looking for this week, and we'll get into that in more detail. And just for all our 8-cap guests, the Forex Flow show is a daily show. So if you want to come and join us outside, I know we're going to be broadcasting this to you guys and girls on a Monday and a Wednesday, but we are here all week. My colleague K-Man is usually with me, but he's taking a long weekend. He's Belgium and he's celebrating Independence Day for some reason, US Independence Day. So, but he's had his nose to the grindstone for a while now, and he's taken a well-earned break, but he'll be back tomorrow. So if you folks want to join us for the show daily, we're here 9:30 GMT, 10:30 BST every day. Right, so let's get stuck into some of the price moves and what we're expecting this week. As I say, obviously bonds are closed, so we need to see what happens when it opens. It is the US holiday today, so we could have fairly light liquidity. But that being said, that can potentially cause some problems because there's not as much liquidity in the market, so we might get some outsized moves perhaps. So just keep an eye on for any any funky moves that we get. So looking around some of the pairs, one pair that I want to focus on today particularly, that we've looked at before, is this Eurocad. Now this was one that came out, have been flagging for quite a while, this range that we've been in. Really big solid level down at this 134s, and we're back down again. I took a bit of a long last week on the end of month stuff on Thursday at 134.17 ish. Managed to knock some of that out above 135. I've still got a little bit on now. I'm in two minds whether to add back here, because at the moment the price action is looking not the best for this level. You know, we're back down at this level. We keep coming back down fairly quickly. We're getting what I like to coin a phrase, too many knocks on the door. I'm still running my stops at 133.80 for the long, and I've got some stop reverses in there to go short on a break. So potentially I think we may be on for a break in this one, but it's been a really solid support level. It almost looks like there's some big play going on here, whether it's a big corporate play. I shouldn't think it's anything you know, semi-official central banks or anything like that, but there's something that's causing this to be a real solid support level. So one I'm keeping on. As Stephen asks, yeah, eventually it will break through that door. Not necessarily. It can still hold again and shoot back higher. You know, that's one of the wonders of trading and trading levels. You know, you've got pretty much one line there. It's either going to bounce or it's not going to bounce. So for trading it becomes, you know, really simple. You either lean on the level and trust it, manage your risk below it if it breaks, or you try and play both sides of the coin. You know, it might break. I might get stopped out, tripped on my sell stops. It drops 15 pips. It's a complete stop, run and fake out, and bang, it reverses higher again, and I get stopped out the other way. That's the risk of trading, but you've got to set your stall out one way or another. And I don't mind risking a small amount trying to catch these breaks, because my own personal view and experience is when you get big solid levels like this, then the chances are if it does break, it's going to be a bit volatile. Should be a good opportunity to grab some decent pips out of it. So that's what I'm looking at for this one. Again, as I say, you know, we are in a low liquidity day. We're 15 pips off that 134 handle, you know, probably marked down to about 133.90. So keep an eye on it. We could be have a stop flush run, or it could be something bigger. Just cracking on to some of the other pairs here, and I'm keeping an eye on your questions. And again, just for those folks from Ecb who may not know the format of this show, come into the comments on the side there. If you've got any questions, then please put them up. We're happy to take those and look at some things and get stuck into any questions you have. What I would prefer is, if you want to talk about a particular pair, please don't just throw up a currency pair and, you know, euro dollar with a question mark. Give me a little bit of info. You know, what are you looking at? What do you feel about this? You know, I can open up any sort of price chart and pick levels and put levels I think about it, but I like to know what you guys and girls are thinking. What is your view on that? And then we can talk about that in greater detail. So looking at euro dollar, let's come into a bit of a shorter term chart for this one. You know, it's walking the ranges again. We've got this 104, 105, 105, 106 area that we're walking around. You know, we've just pretty much come close to the prior lows, you know, back in early June around the 15th. So into this big 103.40 level, which is the real big level, and I'll just quickly zoom it out so everyone can have a look why that's such a big level. So you can see it comes off from the 2017, late 2016 period when we had a big low down there. It was the low for several years after that. You know, for the last 5 years it's been a low, and you know, we're coming down to this big level. We had a little test about it earlier this year, got to what was that, 49 odd, 50 down there, 103.50. We've had another couple of tests down around that area, 60s, 70s. But as you can see, you know, the trend is still continuing lower. The longer term trend from last year is still well entrenched. It's taken some time to move, but we're getting that move down. But then you come down to a shorter time frame and it looks sideways. We've got this range down into this 103.40 area. We've got these highs coming in, 106s. Much bigger level is up at this 38.2 fib that we've marked, up near the 108s. So, you know, looking at the longer term trend, definitely still seems down. Looking at it in a more shorter term basis, a bit more sideways, a bit more indecision. We are nicking new lows, at least in the short term. You know, we had this low here just under 104, then we got a bit lower last week. Maybe some end of month, first of the new quarter shenanigans going on there that I reminded you folks last week to look out for. But we are back above 104. So for me, this is going to be key for the week ahead. Can we stay back above 104? If we do, that tends to insinuate to me that this sort of stuff around here was end of month, beginning of second half of the year stuff. So I'll be looking to see if we get any decent solid support into 104 and any tests going forward. If we don't, if we break this 104 area again and we get down again, we're looking possibly for a big test of this 103.40 level. If that goes, we've potentially got some downside to come, and then we're going to start to hear the parity callers again. Now, this is a level that I've been looking to go long off. I didn't get it the last time we were down here. I was sitting a bit closer to the level. The price action is going to be important. You know, the fact that we're creeping lower after the last week or so, if we get a test down here, I'm going to be more cautious that we're going to get a break. I'm not entirely sure it's one I want to go with, like the Eurocad, because if this one does go, it has the potential to go a bit more, but it also could just be a flush out. So I'm going to have to match up the reason why this price pushes down. Is it going to be the data? Is it going to be something central banks have said? What's the reasons why we might get a break here? But I'm going to be a bit more cautious playing longs, looking to play longs, and a bit more cautious with a sell stop underneath. It may be, if it does break, I'll wait for a retest to that level, look for a bit of confirmation that that level has broken by it becoming resistance. That might give me a bit of conviction to then try a short break trade on that. Obviously, with the big data this week, and a big look at yields, that's going to be a big driver for this, and seeing whether we're going to get that divergence. Is the flows going to switch between the dollar and euro, depending on how markets see these recession fears and how that's going to feed into the central banks. Looking at dollar yen across quickly. So this 134.5 area is a bit of a marker. I know it is for several people in our room, for K-Man as well. This is a bit of a line in the sand down here. So we haven't managed to get that close to it. We've had this break under 135. So it's looking a bit rangy again for me. I'm not too interested messing around in the middle here. We've got a bit of a pivot point, this 135, 50, 60 area, an area I was looking at last week. It was prior resistance, then we had the break, then it got a little bit messy, but then we saw it as resistance again, resistance, a break, then it becomes support, you get the picture. So this is becoming a bit of a pivot level. If we hold below, then that potentially opens the door for a further move down. We've had 3 goes at this 134, 70, 80 area, so short term, that's your marker for the main support. If we do break above here, then we're probably going to get a look up again at 136. I'm mainly looking at this with a bit more of a longer view. I want to see how we do up here if we get up to these highs again. Do we see this 136.70 area resisting once again, or are we going to get another look at 137? Overall, there's no real fundamental changes from here. I think, again, we're going a bit sideways based on the yield divergences. You know, the US coming off. I would have thought that maybe, and a few people in our chat room thought that with yields coming right down in the US, you know, under 3% in 10s, that this might suffer a bit more. But again, it's still got the fundamental factors of you know, high energy costs for the yen, and but also that divergence between what we might be seeing in yields elsewhere. Obviously, going to be a big month for the Bank of Japan as well. Are they going to mention anything about changing course? That might be something that's weighing on the market's mind as well. So in the meanwhile, it's just range trading for me. I'm going to potentially park myself at the edges rather than try and mess around in the middle. Look towards the highs, look towards maybe that 134.5 mark to see maybe if I want to try a short-term scalp long, something like that. Right, so let's have a look at the bonkers pound. So we had a little test I see last week at that 120 area, and pretty much like last time we had a little bit of a flush through, not as big as last time, but we had that break which was going to clean out all the stops who were sitting there, you know, lining up at 120. That's why sometimes when you've got these big levels, you have to potentially give yourself a bit of room, because you will get this type of reaction if it's going to blow. If it's going to really blow, then we would see it as resistance now and we'll be heading much lower. But looking at that again, the time of day, you know, coming in towards that latter part of the first into that sort of fixed zone. I haven't caught up on what actually happened on that one, but that's what I'm suspecting. It was some of that new month stuff going on there. But here we are, sailing happily get above 120. And as if we take a quick look back again, we can see the strength of that 120 level. So it's a level that still becomes something to lean on. If we do get a move down there, while it's not end of month stuff that we had last week, I would be potentially keener on a long. As I was sitting in a pub last week when that happened, I had no interest whatsoever. But again, looking at the trend coming from the May highs last year, you know, there's no reason to think that this trend is going to break anytime soon. I'm still not overly keen to trade cable because it is up and down and all over the place. But certainly, you know, if you're looking up towards 123 and these recent highs, 123.5, that's the sort of area when you're going to need to start taking out to really potentially start changing this trend. Otherwise, it does look a bit like the euro, where we're moving sideways a bit, just with a bit more volatility. So 120 will be my marker moving forward from here. You know, maybe a break above 122 might have some legs up to 123, but I'll be wary about potentially getting caught in the middle round here if you're looking to trade that. Just to have a look at some of the questions, if any guys have got in there. And there, so Stephen, Ryan, are you both counter trend and trend continuation? Just wondering. It depends on my time frame. So I can counter trend trade, or I can trade with the trend. For example, as you know, I'm in a euro sterling long from the 83s, averages 83.50. This was the area that I wanted to start buying in. I didn't get this move down here. I got it a bit on the short term side, but then I was forced to wait until we came back around here, get in some 83s. So this one, I'm trying to ride this trend up. And in the wider picture, what I'm looking for is to trade the reversal of this move down from the 92s that covered Brexit, covered Boris getting in government, and also getting into the Bank of England turning hawkish, because I knew they were going to be turning hawkish pretty quickly. So this one was a trend that I wrote down on the short side. This was my area to start looking at longs, getting the timing right with the ECB and what they're potentially getting up to. And as we can see, we did have a breakdown. Again, this was another multi-year area. I'll just show that up for you guys. So you can see down here, you know, down into 84s and down into these old 83s, big areas. So this was an area that I wanted to try and trade. Timing was everything. I thought that the euro was going to suffer a bit more coming into this year. I know Stelios and myself pumped this one as our trade of the year to be long euros, but the timing was something. So anyway, long story short, I'm long this one and I'm looking for the moves higher, and I want to trade the moves higher. So I want to go with the trend for this one. But that doesn't mean I won't counter trend trade it. You know, I had trades of a break of 86, trying to add some back into the long position, add a bit more to the long position whilst trading it as a short-term trade. This 87 area is my big level. This is where if we get a big break, I'm going to potentially go with buy stops. Again, place them as a short-term trade. Try and take some profit if it moves higher. Then just put a portion into the desk drawer, if you like, into the core position, the long position, just to see if I can continue to ride that. But I'm not averse to having a little short, separate short at 87 to test that resistance up there, and then reverse it into a long if it breaks and if I'm wrong. I'm quite happy to trade both sides of the market. I don't tend to pigeonhole myself into a bias, but again, it's all about different time frames. I can be short term bearish on euro sterling up into 87 level while still being long term bullish on the big fundamental picture. So let's have a look at a couple of the other questions. So Dolomex for Mihek, I hope I've pronounced your name right, and welcome to the Flow Show, my friend. So Dolomex, let's have a look at that one a bit on the wide. And please forgive some of these charts if I don't have a lot of tech on. I don't use TradingView platform a lot. It's good for the streaming, but I don't tend to do most of my chart work on this one. A big area that I know the K-Man was looking at, and I've got half an eye on as well, is up towards the sort of 2080 area. Looking a bit more on the shorter term. Let's have a look at a 4 hour. So got a bit of a developing area, you know, around about these 2070s, 2080s. Fairly solid resistance zone, and one that we're looking at potentially for shorts. In terms of the trend itself, again, it's looking a bit sideways. Obviously, plenty of volatility in it. But for now, this is one that looks a bit undecided. Doesn't know if it wants to go up. It doesn't know if it wants to go down. We're swinging around what's happening with rates in the world, because here's one that they're hiking. I don't know what rates are at the moment in Mexico, 7.5% or something like that. So, you know, another strong hiker. And as you mentioned there in the comments, it's a good funding currency, you know, strong carry trade in there, and you're going to see flows into pairs like this because of that strong carry trade. You look at some of the others, you know, something like CADMEX. I know some of the guys in our room trade those, again, purely from the funding side of things. So trending, yeah, you've got a bit of volatility. So, you know, if you're getting big volatility in these pairs, if it's moving in decent percentage terms, you've got to factor that in if you're trading it as a funding account, as a carry trade. But, you know, you pick your ranges, you stick to the edges. You know it's roughly going to stay within this sort of 19.5 to 20.5 range in the main. So if you're happy to manage between that, maybe stick to the edges if you want to trade in and out. Then look at that. Let's have a look at some of the other questions before we look at some of the other pairs. Trade Journal, yeah, we'll look at dollar CAD in a moment. Let's have a look. Artem, can you please tell me more about how to be good in timing trades, how to learn it? Maybe some advice. Timing. I've been doing this a long time. I still get my timing wrong. One of my biggest negatives, if I'm doing a long-term trade, if I'm building a position or I'm looking at entering a position, I always go too early. Always go too early. And it's a bit of that FOMO. You know, if I trade long term, I'll look at the charts. I'll have the levels where I want to start getting in, where I'll scale more in if the price moves. If I'm buying, if it's coming lower, I'll have my assistant areas. But I always go too early, and it is pure FOMO. So what I've taken to doing is that sometimes if I want to start a long term trade, I just go and buy a little insignificant amount. Let's say if it's a long I'm trying, just to scratch the itch, just to psychologically, it helps me. It's an insignificant amount I might buy. It will be around the level I want to buy, but I'll just scratch that itch, buy a bit, clear the FOMO, then I can relax and get on with it. As far as timing trades, maybe on a more short term, it's really about the level. You know, if you're trading a short term level, let's say, look at euro dollar again, you know, where you've got fairly tight ranges. You know you've got a level round at 104. You know you've got levels at 105. You know you've got levels at 106. So it's more, your timing should be more about the levels. So if you want to trade now, if you want to trade along at 104, where are you going to go? You're going to go dead on 104, maybe 104.05. So the timing only impacts it potentially on what's coming up. So if this is 10 minutes before the NFP and we're trading here, I'm not going to be having a bid in if I want to trade the 104 level, because we're 10 minutes before the NFP. And if it's a big number, boom, I'm going to get blown out. If it's a bad number, good number, you know, I'm going to get flipped out. I could just get flipped out in the volatility either way. So when you talk about timing, there's several factors to take into account. Look to see if there's any big events coming out, but also it's the reason. More importantly, as timing is the reason why a price is there, and that should be part of your trading armory. You know, why are we here? What's moving the price to this level? Is it something big? Is it just the market's a bit quiet and it's moving around? Have we had a speaker out? Is there data out? It's all about adding all those components in before you trade. If you've got a trade idea, and then saying, right, I'm happy with all the reasons, I'm gonna enter that trade, and then you execute it there and then. But it's no good me saying, yeah, I'm happy to buy 104 sitting here now. It may be half a day before we get there and something may have changed. You always need to judge the situation at the time you're going to execute a trade, and just have that final second guess or second question to yourself: am I good in wanting to enter this trade? And I can do that on levels that I may have been waiting weeks for. You know, we had it, I can't remember what currency is. We had a level, we've been waiting absolute weeks for it, and get to that point, and it's just before the FOMC or it's just before big data, and I'm not going to trade it. I'm going to wait. I think there's some stuff over the end of the month, big levels we're hitting. I don't want to trade this until we're past that hump, because that bit of volatility could knock me out. But it's you know, how long's a piece of string? Timing is a big factor of trading, but there's just ways to mitigate it by asking yourself these questions before you execute a trade. Am I 100% happy this is a trade I want to do right now? And if you don't feel like it's the right time, then you just hold off. You know, you're not going to lose money not trading. But then, you know, you do get some levels that are just too juicy, and you just have to hit them, come what may. And Gavin, you know, says that a headline like that would not stop me going along the pound for a trade, depending on his reasoning for entering. Yeah, you know, that's it. You've got your reasoning, and if you've ticked all your boxes and you still want to enter the trade, whatever's happening, then that's what you do. But you can get too stuck into timing. Let's see, have a look. Let's have a look at dollar CAD. Now again, this is one I've got a bit of a zone here that I know our regulars will know about. Let's have a look on the daily, and it's a wide area, but it's a big area. It's an area that's seen a lot of interest, as you can see, going back several years. Again, we've got a bit of a shallow uptrend going on here, and the reason it's a pretty big area is because if we do manage to clear it all, it's going to potentially start to unwind even more of this downtrend that we saw through from 2020. But it is still a sticky area. You know, we can't get up to the top of it. We can't test the top of the channel, and we are finding that if we break back out of it, we can hold it resistance. So this area for me is 129 to 131. Again, if I was trading this, and I'm going to be looking to trade this, I was looking at shorts into 131. I didn't go. I thought it was a bit. I thought we might get 131, so I held off up into these. But that was a cracking double top there. Conversely, you know, if we get a move, if we hold under here, then we're potentially heading further south. But in terms of overall direction, you know, we've got big ups, we've got big downs, we've got big ups, we've got big downs. So overall, that just screams to me again, it doesn't really know what it wants to do. It's not making a move. It's not really breaking the trend. But volatility wise, you know, it's giving you some decent levels to play if you have the patience to trade the edges. I'll just go back to Trader's Journal there just to make sure I've got his question. Where's he gone? Yeah. So you're looking, you had your short and you got out for now. So potentially you want to, you know, if you're going to be looking at shorts, you know, 129, again, the bottom of this zone. We've had a little bit of a messing around within it, but largely it's holding below. It's not getting into this zone and holding. So if you are looking at shorts, this will be the sort of area that you want to try into 129 again. You don't have to be brave. You don't have to put the farm on it. You know, 20, 30, 40 pips. You know you're going to be wrong if it goes above. And just see where it goes. But in terms of support, you know, we're going to have some minor levels. 127.50-ish is one of the areas, maybe 70s, 80s. It's one of those ones I want to see how the price develops. I'll have various areas that I think this is where we could see some traffic. And around the 127s is going to be one. Get under there. We could have a move all the way down, you know, 126.5, maybe a look at the bottom of this range. And if we get to the bottom of this range, well, then you've got another opportunity to trade the techs. That's all I really do. Look at the ages, look at the ranges. A couple of guys and girls wants to look at gold. Got a lot of requests this morning. I love it. I love it. Give me your requests. But also someone like Merlin, Aussie dollar, question mark. Give me a little bit of what you're looking at. You know, give me a bit of insight, and we can take it from there. I like to know what I want this show to be about. You guys giving me something, giving me, you know, something to get my teeth into. I want to get inside your heads as well. I don't want it to be just me throwing up charts and talking about levels. I want to know what you guys and girls are looking at. But for Aussie dollar, I'm thinking that we've got a break on here. We had a bit of an area here. Let's bring it in a tiny bit just to start off with. Let's go for an hourly. So we had this area down into the low 68s. Again, we've had it as support. We've had the move up. We've come down again, and then we've just seen this, you know, lower and lower and lower action, and it's culminated in a break below. Again, it's come at that end of month, end of quarter, end of half year period. So have we got a true break here? I think potentially we could be heading lower in this one. At the moment, we've pushed back up. It doesn't look too strong to me unless we start moving right back up, you know, above 69, 69.5. I'm thinking that this could have some further downside to go. Again, if we want to look at the wider picture, just to get an idea of how these levels are shaping up on the bigger time frames. You know, we're getting closer. 67.5-ish is the 50 fib of this, the move from the virus situation. And again, the trend is continuing lower, and we just can't break it at the moment. So we've had the break last week. It's potentially cracked the egg a bit, much like euro dollar. We're back above what is potentially a key level, but this one I'm feeling a bit more bearish about. You know, we need to look at stocks. Stocks obviously a big influence in here. What's happening in China going on here as well. But I'm certainly not bullish this one at the moment. And Molly wants to have a look at silver. So we'll have a quick look at silver. This is one that some of the other guys look at in more detail. I know Stelios, our Silver King, he's getting ready to back up the truck for this one. I think 1950 is his, I think he's already started going in, but 1950 is one of his key areas, and even if we get to 19. This one, it's been a bit like gold. It's not really done a lot in terms of what's been happening in the fundamental use. You know, all these last week we had all this recession fear coming into the market, And really, it's only started to pick up in the latter part of the last week, you know, catching the same cold, if you like, and getting on that bandwagon with you know, if industry is going to start suffering, you know, take out the speculative side, and look at gold and silver as a commodity for its industrial use. If that's what's going to happen, and we're going to see recessions, and we're going to see, you know, economies stalling, then your industrial metals and your commodities, for what they're used for, are going to see weakness. You know, it's only if we get a real switch into risk off, real global worries, do they then become a bit of a safe haven. So I think what we're potentially seeing in this, and gold as well, is some of those worries coming into the market to do with the fundamentals and the lower growth outlook. But at the end of the day, you know, if you want to trade it, it's there to be traded. So you pick your levels. And I know K-Man's had these levels on this chart for a while, up into the 1870s, 75s. That's your resistance area. If we get a move down, you know, around about 1760, 1750, that sort of area is your decent support point. So no matter what you think about the fundamentals, if you're purely a technical trader, those are the levels you need to look at. And the price can only do one of two things: it can hold them or it can break them. It's how you trade it. Those situations is how you make money. So it doesn't matter what I think about gold and silver. Those are the levels, and you've got to trade them accordingly. So let's have a look. Any other questions before we move on? And good to see there's a lot of questions coming in. Right, so John, I've just covered that. I've not read that story about the gold find in Uganda. You would think it's potentially bearish news, so I'll have to have a look into that one. I suppose it all depends on their ability to get it out the ground and get it into the market. So I'm not sure on that story. I'll go and bone up on that one, if you like. And do I use the fib retracements for possible entry zones? Yes. They become part of the technical picture. So I use them to trade, but also my main use for fibs is to show whether a trend is really breaking. And I like to use them over wider time frames. I tend not to use fibs on anything, you know, probably less than a month worth of price data. You won't see me fibbing a daily move or a weekly move or something like that. Because I tend to feel the longer the time frame I use fibs, the more accurate and stronger they can show up as. You know, you can see what the 38.2 was like in euro sterling. You can see what the 50 fib is like in there as well. You know, this is when the techs look absolutely peachy. And yes, this is what I will trade. But I'll trade it just as the same as a horizontal line or whatever, a moving average. To me, the tech doesn't matter. It just gives me a reason where I can manage my risk. It gives me a level to manage my risk against. We've got to pick somewhere on the chart, and fibs just another tool in the box. So it's nothing special in those terms. But yeah, for me, the fibs are main indication: are we really breaking a trend? You know, we've got a strong uptrend here, but it can't break the 50. Until it can break the 50, we're potentially staying in trend, and we can have another look down to the lows. Amihek, oh, you're a busy one today, aren't you, mate? Why is Euro Swiss so low? Something to do perhaps with the central bank pulling out a surprise hike of 50 pips, looking to do more. The market is looking very bearish on this now. Purely, we're seeing obviously some euro weakness, and we got that last week as well generally. So you've got euro weakness with a surprising central bank who's potentially looking to do more. Factor in a bit of the risk tone, so it's a bit of a safe haven as well. The central bank saying that they don't feel it's as the franc is as strong or as it has been. It's a little bit of a foot off the gas for that reasons. All the reasons why it's been supportive before, and those reasons have dropped out or become lesser in the market. You know, again, I can't trust too much in what we saw here last week. You in the latter part of the week. Again, just to repeat, and I know I keep repeating this, but the end of month stuff really is a big feature. You only got to look at what happened in prices last week. Until we open up tomorrow and the US is back and we got a more full on market, I don't know how to trade this at the moment right now, because I don't know, were the breaks last week real below the parity level? Does it look like the S&B might be there smoothing the trade? We were talking about this parity level last week, and while it's a big psychological level, and we already got the chatter that yes, people are going to start jumping in and front running the S&B because that's where they'd expect it to be. And I said last week, you know, the S&B don't offer any free lunches, so I wouldn't be surprised if we see the one level broken, a flush down to maybe 60, 70, something like that, kick all the front runners out, and then we see a move back above. Well, we've had that, but we haven't really seen a solid move above. We need to build a solid base at this parity mark to potentially move it back up. And if we don't, then we're going to be heading lower. But don't be relying on the central bank to be there. Factor it in. If you're shorting, factor it in that they could be there, smoothing the price down. If you're looking for longs, you might have to be relying on that one level to hold now in the short term, as I say, maybe tomorrow if when we've got a more fuller market. As for where we go, if we do break below and hold below the parity level, well, you know, we're looking at these 2015 lows and no one really knows where they are because of the stuff that happened back then. So for me, it's probably going to be this sort of area around the candles, the weekly candles that we got after the big cap pull, because that's where the market was a bit more solid, a bit more liquid. You know, that's down to 97s, 98s, that sort of area that I'll potentially be looking at as where we might see support. But other than that, it's a bit of an open gap below here. So this is probably one for the techs, at least, you might have to let the price develop. Brand, just quickly back on fibs, I don't do extensions. No, just something I've never used. I don't do the smaller fib levels in between. I'm 38, 50, 61. That's my lot. Purely because I just don't like overcomplicating my techs. I'm a simple man. I came from simple beginnings where we didn't have charts and technical analysis. And I basically stick with for want of a better reason, the technicals that a lot of people look at, because my view of technicals is that they work purely by weight of numbers. The more people that are looking at it, be it retail, be it institutional, the greater the chance that they'll work. And that's the reason why I stick to the main moving averages, 55, 100, 200 day moving averages, horizontal lines, the main fibs, and trend lines. And that's usually all you'll see in my stable. You won't catch me doing head and shoulders and any of that other witchcraft stuff. But that's not to say if it works for you, then absolutely fantastic. You've got to find the system that works for you. Khalid, I did have a quick look at gold. I'm not much to say on it. I'm sticking purely to the range 1870 above, 1750, 60s below. That's the sort of range I'm looking at. Pretty straightforward. No need to mess around. Down here, up there. Anything in between, a bit of noise for me. So, you know, there's that 1760, 50 area. And then we've got another area, bigger area, 1679. And I'm happy, if I'm going to trade it, just to wait, have patience and wait for those. Mihek, what's the average percent of your take profits? What do you mean by that? How many trades I win or lose? I looked at this a while back because it struck me. We had the a big Traders Summit event, and we had loads of speakers on there, and just listening to some of the people and how they trade. And the thing about trading is that it's okay to be wrong, but you want to make more when you're right than lose when you're wrong. And I just happened to, I just as an exercise, and I don't look at this day to day or anything like that. And I've got a 51% weekly win rate. And and that surprised me because I thought it might be higher, but it's not. But what it shows is I'm making money. I'm making more in the stuff that I win than the stuff that I lose. So your question: how much is the average percent of profit when you make a winning trade? I don't look at that, to be honest with you. When I look at a trade, I don't care about the profit at the start. My sole makeup of trading is manage my risk first. The first thing I want to do whenever I execute a trade is get to low risk or zero as quick as possible. The profit comes after. Okay, I don't care about the profit. I care more about being wrong. And if I can put in place the strategy, and if I can manage my risk so I'm not wrong, the upside is profit. And from that point, then I will look at where I get out of trade. And again, it's not based on numbers. It's not based on pips. It's not based on how much percent I want to make before I cut a trade. I use the technicals to take partial profit, to exit a trade as much as I do for entry. So if I sell something at one level and there's a big technical area 50 pips below, then I ask a question of my trade when I get to that level. Do I take some profit? Do I hold the trade and look for a move through? If the price hits that level and can't get through it, I have to ask a question of my trade. What do I want to do at this point? So I don't put numbers on my profit. I don't worry about how far it can go. I don't have targets for profit. You'll never catch me saying, I'm buying this, I've got a 200 pip target on it. Never happen. I'll have the places where I would hope to, I want to try and take profit, but it's all about managing the trade along the way. Artem, when a price hits your level, do you just buy, sell it according to your planned bias, or wait for some trigger confirmation to get in? After some time on markets, I started to think that waiting for confirmation could last forever and often results in having an entry on much worse prices. Again, it goes back to, you ask yourself the question on when you want to execute a trade. And if you tick all the boxes, then you trade. If you don't tick all the boxes and you're a bit unsure, then you don't trade. We all overcomplicate things. We all overcomplicate our trading sometimes, and we spoke about this last week. We all second guess, question, but at times you've just got to make it a simple exercise. And if it helps that you write it down, give yourself 5 reasons why you want to enter a trade, 5 reasons why you won't want to enter that trade, and you just look at them and match them off and think, right, well, actually, the 5 reasons I've got for not entering a trade are not as strong as the ones I want to enter a trade, so I'm going to do the trade. And conversely, if your reasons are far stronger for not entering, then don't enter it. It's in our own hands, and it is hard. We all overcomplicate it, and it's just trying to, if you find you're overcomplicating a trade, take a step back, take a breath, go to the levels, go to the text, and just think, right, am I going to trade this level? Right, so let's have a quick look at the time. We've, blimey, nearly done an hour already. And it's only Monday, and it's a quiet day so far. So thank you very much, all you guys and girls, for coming. We're going to end it there for today. Hope you 8cap folks have enjoyed the show. As I say, we're here all week. Otherwise, we'll be back with you guys on Wednesday. My colleague Kay will be back tomorrow, so he'll give me a chance to take a breath and a drink while he goes through his numbers. But thank you very much for coming to the show. I wish you all a great week this week, and we shall see you tomorrow.